Moody's has downgraded African banks' global and local credit ratings. This follows the rating action taken in October last year, where Moody's changed African banks' outlook to negative. For more on this now, we're joined on the line by Gavin Jones. He's Executive of Funding and Liability Management at Treasury at ABIL, and he joins us, as I say, on the line this afternoon. Gavin, thanks so much for your time. Let's get straight into the story. We've seen the downgrade come through from Moody's. First of all, is it warranted in your books?
Look, really, Alishia, I don't think it's for us to say whether it's warranted or not. Obviously, they've got their job to do. Clearly, from our perspective, we believe in our business model that's sustainable through all market cycles, and that we believe that we'll continue to deliver, appropriate returns through all market cycles. So we're still very confident.
You are confident, but you can see to an extent where this is coming from. Where do your concerns lie? Because looking at your own actions, you have seen a pulling back on some of your loans.
Look, we have guided the market since about August last year that there is, on the supply side into the unsecured credit market, somewhat of an overhang, and we felt that it was prudent to exercise some caution in the provision of credit, and we see that some of our colleagues in other organisations have followed suit as well.
As you see that coming through to mitigate against some of the risk, Gavin, moving forward, we've also seen you put through a gradual increased diversification, in your book over the past few years. Run us through that strategy and how that's playing out right now.
Yes, so we felt from about 4 years ago that it would be appropriate for us to continue diversifying our funding and liabilities book somewhat. And so we've moved into the international markets, which was quite a big step for us. But it's worked out pretty well from us. It's not an easy market to break into, and clearly we've had to pay some school fees in terms of the spreads that we need to pay there. But these have been contracting significantly over the last couple of years, and it's worked out well for us, we think.
Looking at what's playing out in the broader unsecured lending space in South Africa right now, Gavin, to what extent do you see the image of ABIL having been tarnished by the likes of bad micro-lenders in South Africa?
Look, being the biggest player in the unsecured market, obviously we feel some need to display some leadership in this regard, and this is why we warned the market at the occasion of our third quarterly trading update on the 6th of August last year, of some supply-side concerns we had relating to the provision of unsecured credit into the market. And some of those included some practices that are relatively unsavory by some of the smaller entrants into the market, yes.
Mm-hmm. Looking at some of the headlines that have surrounded ABIL over the recent past, Gavin, we've seen, the National Credit Regulator come to the fore and, really holding you or beating you over the knuckles for alleged reckless lending. We've seen a fine being imposed of 300 million rand. Has that been warranted in your books? Because we've certainly got bankers as a whole worried at this stage of the game about the National Credit Regulator specifically, and whether this incident was a mere knee-jerk reaction to an isolated incident and not and this regulator not acting in a considered way.
Alishia, look, just to correct you, the fine hasn't been levied. The National Credit Regulator doesn't have the capacity to levy a fine. All that they have done is recommended to the National Tribunal, the Tribunal of the National Credit Regulator, that a fine of that size be considered. So that is a process which is underway, and clearly we have made public statements to the fact that we don't believe that it's warranted, given that this was the result of a fraud perpetrated against us by certain of our employees in acting in conjunction with certain of our clients, and so we don't believe that the action by the National Credit Regulator was warranted. But a certain degree of increased scrutiny in the market is inevitable and in fact desirable, given some of the supply side concerns that I'd alluded to earlier on.